Okay, ready.
Okay. Well, good afternoon, everyone. I appreciate everyone continuing to make time and to contribute as a public servant to the city as a member of this committee. I'm going to call this meeting to order. It is now 12:03, and we'll do a roll call attendance vote, please.
Mayor Loza?
Present.
Vice Chairman Lombardi?
Present.
Councilman Igliozzi is absent. Ms. Silveria?
Present.
Mr. Costello? Absent. Mr. Hirsch? Absent. Mr. Winkleman?
Here.
We have, no, excuse me one second. Mr. Costello, you're muted, please. Can you hear us? Mr. Costello, can you hear us?
He's unmuted now.
Yeah, he's not. Mr. Costello, can you hear me? He's unmuted.
He may be muted on his phone if he's using his phone for dialing. Can you ask him to unmute?
Yeah, I know. Mr. Costello, if you're calling in from your phone, could you please unmute yourself? May, you can start, and we have a quorum without him right now, and I'll try and text him to see if we can get him.
Sorry,
Here he is.
I'm sorry. I had a house problem.
That's okay. That's okay. We're just calling the roll. We wanted to make sure we included you. Mr. Costello?
Here.
So we have 5 present and 2 absent. We have a quorum.
Okay, great. Well, good afternoon, everyone, and I appreciate everyone continuing to make time for the city and to serve in this capacity. So we have Eric and Jeff on the line. We'll move on to matter number 1 on the agenda, the investment performance analysis, and I'll hand it over to Eric.
Thank you, Mayor. Hello, everyone. As is customary, if you would turn to page 1 of your update, we can go through a flash report and update you as to where the portfolio sits. As we said last time, we expected a lot of volatility in the future. I'm referring to our last meeting, and that has happened in both directions. You may recall at that time, the portfolio was down 11.6% year to date. It is now down 8.3% year to date since our last meeting. So we've made another 3.3 points. What's interesting about that is that occurred with a very large sell-off in between. Starting on June 11th for 4 days, the market fell 8.2% in 4 days, and then recovered a lot of it, but not all of that fall, and then fell again yesterday. But this, I think you should expect the volatility that I just mentioned, and that you see on your flash report, both on a month-to-date and year-to-date basis. I think you should expect that to continue. Since our last meeting, we have had both good news and bad news. The good news is that some of the economic data has been surprisingly strong. The jobs report was very, very strong, far stronger than expected. Retail sales were extremely strong the other day, the highest growth in retail sales in the history of the index, which goes back many, many years. Durable goods this morning, extremely strong and better than anticipated. Yet, some states, especially in the South, which reopened early or have been less cautious than some of the northeastern states and other states, for example, are showing some reacceleration in COVID-19 cases. Again, sort of California, Texas, Arizona, Florida, and that's getting the market's attention, and that has been partially responsible for the volatility that I reference and that you see on the page here. Nonetheless, as I've said many times, with the Federal Reserve and the federal government intervening with truly gigantic stimulus, the markets have also noticed that, and that has led to a very strong rebound in the last 2 or 3 months off the bottom in March of this year, and the portfolio has reacted with that in mind. Value still continues to trail growth, as you see on your flash report. Those items with growth exposure are doing very well compared to value. Positive, for the year to date, including 1,000. You see Russell 1000 growth. Your index fund is up 8.7% year to date. That's with the general market down, and you can see that the indexed exposure in value, for example, is down 14.5%. So in large cap, and that effect is extreme and continues down through mid cap. It goes down into small cap, where value deeply is underperforming growth. This is happening internationally as well. So extremely unusual times. Your fixed income is doing quite well, actually. As you can see, the total fixed income exposure is up 6.3% year to date. Interest rates have come down rapidly. Corporate credit has recovered incredibly strongly since the Fed intervened in March. Issuance of bonds is increasing rapidly, and many of the programs the Fed announced that it would do to help markets have either not been implemented yet or only very slightly begun, and that's because the demand just hasn't been there. So literally, the announcement that the federal government stimulus and the Fed's stimulus was going to occur helped to stabilize financial markets and bring spreads down and allow markets to function more specifically well, just from the announcement effect. Now, they will go through with all of this stimulus. The Fed is not going to stop, even though much of the announced intervention has not yet been implemented. They will do so. The balance sheet of the Fed is up to over $7 trillion right now. It was around 4+ when they started. So again, that gives color and context as to truly just how big the intervention has been. That's been mostly purchases of treasuries and mortgage-backed securities, but that's helped a lot. That's one of the reasons that the bond portfolio is doing so well on a year-to-date basis. So again, to summarize, very good news in the last month or so, with some bad news as well on the virus side. There's been some good progress on the vaccine quest, and markets see that, and also on antibody-based therapeutics, etc. Markets are very upbeat about that. It's sort of a question of when these therapeutics and vaccines will be available, at least in the eyes of the market, as opposed to, if at all. It's not a question of if, it's a question of when in their markets. Could be late this year, could be early next year. That timeline will affect markets. That will be a source of volatility going forward, as well as the election. Very, very recently, in the last just days, really, days to a week or two, markets have begun to pay attention to the election and that outcome, and that will move markets, various sectors, depending on whose policies will be implemented. So that's going to be another source of volatility in both directions in coming weeks and months. So while we've had a good month since our last call, I do expect that markets will continue to recover and the economy will continue to recover over the next year and 2 and 3. We should expect continued large swings, I would say, in coming weeks and months. But again, at least it's gone in our direction nicely since then. You can see the portfolio is once again over $300 million as of our date of estimation, which is June 19th. Can I answer any questions or amplify any of my comments, Mayor?
This is Mike Costello, would you talk a little bit about Robeco and their performance?
Sure. If you turn to page, let me get it exactly for you. If you turn to page 22 of the book, page 22, there are two mandates for Robeco, which used to be Boston Partners. We'll start with mid-cap value. You can see that it is outperforming across all time periods. Year to date, it's down less than its index, trailing 1 year, beating by about 400 basis points. Trailing 3 years, it's beating by 200 basis points. 5 years, about 160 basis points, and so on, and nicely over the trailing 10 and 20, and since inception as well. So adding value, but value indices, as I was saying earlier, are very much underperforming growth stocks. Growth exposure has just for several years now, but especially this year, has far outperformed. For example, year to date through this day, through the 19th of June, I have some data for you to help give you some color. Russell 1000 growth is up 8.67% through June 19th. 1000 value, again, same capitalization size, but just value, that's down 15.2% year to date. So a 24 or 25% spread in those two, which is historically high. We have never seen as big a difference in growth and value over that time. If you look at mid-cap growth is up 4.2% year to date. Mid-cap value is down 17.4% to date. Huge spread. Never seen that before in our markets. Similarly with small cap growth is down only 4.6%. Small cap value is down 24.5%, those indexes this year. So while the manager is adding value and outperforming its index, in this case on page 22, it's the value growth differential that is leading to this. This is very much related to interest rates. Again, the Fed lowering interest rates, as I've said in the past, has a huge effect on growth, outperforming value. Also, by the very nature, value stocks, which you can think of as industrials and financials and energy, they tend to be cyclically more sensitive, in this case, to this pandemic-induced recession. Again, we're going to have a massively bad number for the second quarter, although not as bad as we thought. Still going to be extremely bad. Unemployment is, at sort of depression-era levels. So those stocks are just more sensitive to this type of recession that we have, and they benefit less from value stocks. That is, they benefit less from lowered interest rates as well. So I hope that adds color there for Robeco.
Thanks, Eric.
Yep. Any other questions?
All right. If there is nothing else, going once, going twice. All right. I will ask everyone, I will entertain a motion to approve the investment performance analysis as just presented by Eric. Is there a motion on the table?
I'll make that.
I believe Commissioner Winkleman moved. Is there a second?
Seconded.
Who was that?
Jimmy,
Yeah, Lombardi.
was that you?
Commissioner Lombardi, second.
Yes.
Thank you.
Any discussion on the motion? All those in favor, please say aye.
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 Any opposed? Okay, the motion carries and the investment performance analysis is accepted. We'll move on to matter number 2 on the agenda, discussion and/or decision relative to the rebalancing of the portfolio. I'll hand that back to Eric.
Thank you, Mayor. If everyone could please turn to pages 9 and 10 of the report, you will see our recommended rebalancing. This is a standard rebalancing that we are recommending. It's probably easier to look at page 10. Page 9 just puts in words what page 10 shows on the spreadsheet. But it's time for a rebalancing, and I will walk you through this spreadsheet to understand how to read it and what we're recommending. First of all, today, as far as we know, later today, the city will be withdrawing $7 million for its standard monthly benefit payments. So we have to generate that liquidity, and that's what the middle column talks about. It says less benefit payments scheduled for 6/25/2020. That's on page 10. So you see what we're recommending is to use $3.9 million from the cash account and to use $3.1 million from Luma sales to meet the benefit payment of later today, as we do on every month. That's the standard procedure. Now, after taking that into account, this will call for various reasons, including that we have been taking money every month from the fixed income as the liquidity reservoir to make these benefit payments. It's time to do a rebalancing to get our exposures back towards the long-term strategic target. So what we are recommending is in the column called rebalancing. You'll see there are 2 columns inside of that: managers to decrease, managers to increase. So we are recommending pulling $7.7 million from the equity managers and $900,000 from the international bond manager to get those allocations back closer to target, and taking that $9.7 million total and allocating it to the bond managers, $8.4 million to Luma sales and $1.3 million to Vanguard Intermediate Term Treasuries. The last column show what the resulting balances and percentages would be after that rebalancing. And you can see we get back much closer to balance, to the strategic allocation. There's some rounding error there in some cases. And that would get us, if we engage in this rebalancing, again, we do this 3 or 4 times a year, that would get us quite close to our target. And then later at the end of July and in August, the city would be making large contributions of cash to the portfolio, and we will rebalance again and get all of these line items back towards balance for what the strategic allocation calls for. Again, that will change based on some outflows of another $7 million next month and market behavior. So this will get us in a good position for the coming several weeks until we will rebalance yet again. So that's how you read this spreadsheet and what our recommendations are.
I have a question.
Yes.
I have a question. On the managers to decrease, I see minus 7.7 total equity. And then I see total fixed income minus 900,000. I don't get minus 9.7.
Oh, sorry. Up above, you'll see cash, a further 1.1 million.
Oh, yep. I'm sorry.
From
I
cash.
knew there was some. Yep, got it.
I'm sorry. I should have mentioned that.
Yep.
Yes, a further 1.1 from cash.
Okay, yep. I just missed cash.
Eric, this is Mike. So I noticed all of the equity sales are coming out of growth, which means that our tilt to value is going to get even greater. And I do recognize that there's a very significant gap between growth and value, and it's at historic proportions. But has been able to be said for a while now. Did you contemplate trimming back any of the value managers, or having a more balanced reduction between value and growth?
Well, yes, but the reason that's coming from growth is because they're the ones that are overvalued relative to the target. So this is simply returning to target. And by taking from value, they would be even further under target than they are now. So without a change in the target, this is what a standard rebalance would call for. Going forward, if the committee decides that it wants to change the target allocations to value and growth, then of course that would occur. But in this case, it was just because growth has outperformed. Their numbers were above, their market weights were above the targets.
Okay.
So, Eric, continuing on that line of questions. So, given that there is this historic spread between value and growth, do you recommend that we take action on reallocating our targets on value and growth?
I recommended we consider that of several meetings ago, back in the beginning of the pandemic, and Mr. Costello brought that up at the previous meeting, and he asked if we could wait a few meetings before we consider doing that. But we were planning on bringing some thoughts on that at a future meeting, as Mr. Costello requested. But not at this time. Now, other members of the board want to go in other directions, so it's going to be up for discussion. But nonetheless, I have said in past meetings, and again, it was a timing discussion, as Mr. Winkleman brought up. But I believed back in February and until now, and I think. Going forward, if we wanted to make some timing changes to the allocation, I think growth has the probability of continuing to outperform value in the short run, meaning over the coming quarters or year or two, especially because of what the Federal Reserve is doing. In the extremely long run, I believe value outperforms growth. I do. Over the decades, I think that the evidence supports that. However, it hasn't worked in the last 2 or 3 years, that's for sure. And it can go on. It can. So it's a question if the committee would like to make a timing decision on something like that, at least a tweak or an adjustment. It doesn't have to be a big move. That's going to be up for discussion, I guess, as of what we discussed in a previous meeting. Another, in a couple of months from now, as was said at the last meeting.
This is Mike. So I think it's my prior comments. I've always been a believer of don't go surfing in a hurricane. And so when the markets were as volatile as they were, and to a lesser extent continue to be, I think making major shifts often can be a mistake.
Mm-hmm.
And so that goes back to what I said probably a month ago. I am a little uncomfortable with the idea of taking even more out of growth and rebalancing in this particular environment. I would much rather see us with this 7.7 million have a more balanced approach about where the money's coming from, because if this value trap continues, at least we still have something in growth, and we have a lot more value anyway than we do growth. And so without dramatically adjusting our weightings and targets, I wouldn't mind being a little bit off target, but keeping a more balanced perspective between growth and value that we have currently. So basically keeping this we have now, and however off of our targets that makes us where we leave it alone.
Yeah.
I'm not sure if I explained that properly. Did you?
I
So
think I
you're-
understand, Mike.
Yeah.
Well, go ahead, Commissioner Winkleman.
I agree. I don't do anything and then watch this.
No,
We're not making any big change.
Yeah,
is what
what I was saying is, so we're going to take out $7.7 million out of equity.
Mm-hmm.
$1.4 million of it's coming out of the factor stuff. That's fine. $1.2 million is coming out of the international. That's fine. But then we've got a total of 5.1 coming out of growth.
Mm-hmm.
And my preference would be to take 2.5 or 2.55 out of growth and 2.55 out of value. And what that would basically do is leave our growth and value mix intact that we have today. And I
I'm
can't
completely
imagine
lost.
I can't imagine it's gonna put us that far off of our targets.
Yeah.
Without going through a big formal exercise of changing our targets.
I guess I'm lost. I'm hearing nits.
Okay. So Commissioner Winkleman, can you hear me clearly?
Yeah, I can. No, I'm hearing, when I say I hear nits, these are like nothings to do. I would just say don't do anything.
Well, we have to sell to, we have to raise cash.
Yeah, yeah.
Eric, do you have any comments on what I said?
Sure. I think that would be fine. Again, as you correctly point out, they would be, if we were to do as you suggested and pull some from value as well as growth and split that difference, as you suggested, it would by definition take less from growth and a little more from value, and the weights would be somewhat away from target, but still a small amount, as you point out, away from target. Certainly nothing that I would be concerned about. We're only talking about a very small amount of money, small percentages relative to target. So we could easily do that and adjust this for this rebalancing for sure. That would not raise any concerns by doing so with respect to Wainwright's opinion.
Eric, if we were doing a reallocation today, would you be recommending a movement from value to growth in terms of upping the allocation for growth?
The answer is yes, as long as the committee was comfortable with some timing changes, a very small, a tactical shift, if you will, a tactical tilt. Sometimes committees and members of the committee are not comfortable with that. But if they were, and they said, Eric, what would you do if you had the choice to do some tactical tilting? Then the answer is yes, I would.
Okay, that's helpful. I think that Commissioner Costello's suggestion makes a lot of sense, and that's something that I certainly support.
Yeah, I have no problem with that. It's again small.
So
I apologize.
We could do that.
I've got potentially a lot of background noise. They're doing jackhammer work in front of my house. So I didn't ask them to come. I should have called the mayor beforehand.
I got enough on my hands.
That's why I didn't bother you.
So, appreciate it.
Yeah.
All right, so coming back to page 10. So Eric, are you in a position now to do the reallocation, I guess, reallocating these decreases and increases?
We could. I of course I can't put it on paper in front of you, but I understand clearly what Mr. Costello is saying, and I'm okay with that. So instead of that 5.1 million total coming only from growth, we could split it down the middle and take approximately half of that from value and half from growth. And the others would stay the same. The index, the fidelity index funds, the momentum factor, the quality factor, and the international bonds. Those would remain unchanged, but we would take that 3 million, that 1.2 million, and that 900,000, split it in half, and take that remaining money from value. We could easily do that.
Okay, and in terms of which funds it would go into, I am comfortable leaving that to Eric to determine, unless folks want to see that all spelled out in front of you before we take a vote. Is everyone comfortable if we agree to that, to the idea of taking it out of value as well, leaving which funds it comes out of to Eric?
I have no problem.
I'm comfortable with that. I would just like to highlight that there has been a push by myself and by Commissioner Hirsch favoring the more index-oriented funds and away from the active managers.
Yeah.
So as you're deciding which ones, if you keep that bias in the back of your head, and I'm not telling you which ones to take from, but just note that that has been an ongoing stream of conversation.
Yeah,
Thank you, Mike.
Keep that in mind.
Yeah, and just to reinforce that point, so Commissioner Costello and Hirsch have advocated for that, and that's their suggestions are ones that we have voted on and ratified as a commission. So I appreciate that and keep that in mind. All right, any other questions before we move further on this? Okay, so I'm going to do my best to phrase the motion here. Actually, Commissioner Lombardi, do you want to enter pages 9 and 10 of this document into the record, and then the motion will refer to these documents and changes that we'll make to them?
Yes.
Is that a motion? Okay.
It is.
Commissioner Lombardi makes a motion to enter pages 9 and 10 of the ERS file into the record as Exhibit A. Is there a second to that motion?
Me, John Wickman.
All right, Commissioner Wiggleman seconds. Any discussion on the motion? All those in favor, please say aye.
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 Any opposed? Any opposed? All right. The motion carries. Pages 9 and 10 are now part of the record as Exhibit A. Now, I will entertain a motion to accept Wainwright's recommendation as laid out on Exhibits 9 and 10, with the exception of the decreases to managers in SSGA Russell 1000 growth, Vanguard Midcap growth, and SSGA Russell 2000 growth, whereby half of those decreases will be shifted to decreases from value investments to be determined by Wainwright. Is there a motion on the table?
So moved.
So moved
Seconded.
by Commissioner Costello, seconded by Commissioner Winkleman. Any discussion on the motion? All those in favor, please say aye.
Aye.
Any opposed?
We have a roll call vote, please?
Oh, we'll do a roll call vote. Go ahead, Sherry.
Yep, Chairman, Alonso,
Aye.
Vice Chairman Lombardi. Vice Chairman Lombardi.
Jimmy, you're muted,
Aye.
please.
Councilman Iglesias.
Get it?
Ms. Soteria.
Aye.
I'll do that.
Mr. Costello.
I can barely hear anything. There's a
Yeah.
lot of background noise.
Aye.
Aye. Mr. Costello.
Aye.
David Hirsch, Mr. Hirsch is absent. Mr. Winkleman.
Aye.
We have 5 ayes, 2 absent. The motion carries.
Okay, all set.
Wonderful, thank you. We'll move on to the next matter on the agenda.
Item number 3, yes.
We'll go to matter number 3, discussion relative to the Dexter donation fund and other trust accounts. I'll hand it back to Eric.
Thank you, Mayor. If everyone would turn to page 1 of that document, I can go quickly here. We usually start with the Dexter Donation Trust. You'll see that it too has recovered with the markets up 2.2% month to date through June 19th, down 6.3% year to date. Has less, of course, a lot less fixed income and more growth. No hedge funds. That's why it differs from the overall plan. But this too has recovered very nicely from the depths of the sell-off. We have no recommendations for change at this time.
Any comments or questions?
No.
And anyone who is not muted, please mute your lines. So Larry, John, Jeff, and Eric are all unmuted. All right, any comments or questions? Okay, I'll entertain a motion to approve the report as just given by Eric. Is there a motion on the table?
I so move. John Winkleman.
Okay, moved by Commissioner Winkleman. Is there a second?
Second.
Seconded by
Costello.
Commissioner Costello. Any discussion on the motion? Sherry, do we need a roll call on this?
No, we do not, Mayor.
No. Okay. All those in favor, please say aye.
Aye.
Any
Aye.
opposed? Are there any opposed? All right, hearing none, the motion carries. And the presentation is approved. Move on to the next. Give me just a moment. All right, we'll move on to matter number 4, a request from Harrison Peters, the superintendent of schools, to transfer $63,750 from the Edward Hinckley Bradford Fund to the Providence Promise Fund for the Providence Promise program. I'll hand that over to Sarah.
Sure. So there is a request. It's a continuation of the Bradford Trust scholarships that are given out to Providence High School seniors. This year, the request is for 85 scholarships at $750 each for a total of $63,750. This amount is just over 3% of the balance in the Bradford Trust. And if you have any other questions, I'm happy to help.
Do we need a note from the lawyers that this follows the what's required of that trust? I think we've done that in the past, right?
Yes, and so we generally do between 3% and 5%. I think 5% is the upper limit to meet the prudent person rule, and this is just over 3%. I believe the law department did weigh in on this. I can check my records and confirm.
Yeah, I think it was the purpose also. Are we following the purpose of the fund?
Yeah, that's
No,
the question.
That's the question for the lawyer. We always ask that, I believe.
Mayor, Megan DeSanto from the law department is on the line if you'd like to speak to her.
Yes,
Sure.
I'm not aware whether the law department, at this time, whether the law department has already provided that, but I can look into it and get that answer.
Okay.
Yeah, we're going to need that. I will say that we have handed out these scholarships in the same way in previous years. So I feel comfortable going forward, subject to receiving
Yes.
that letter from the law department. If folks
Right.
are open to that, I think we can move forward.
Yeah.
Megan, can you make sure when you get that information, it's forward to Sean and CC me, please?
Will do.
Thank you, Megan. Larry, I think Larry had a question, Mayor.
Okay.
Mayor, no, I just had I was just going to confirm what you had just stated for the record, that this is based on prior provisions of the law department advising the board that they could make this disbursement. It's consistent with the terms and conditions of the Edward Hinckley Bradford Trust, and it is a permissible activity. It's an activity, if I may, Mayor, it's an activity that falls under the auspices of the superintendent of schools.
Okay, any other questions? Okay, I will entertain a motion to approve the request from the superintendent to transfer the $63,750 from the Edward Hinckley Bradford Fund under the condition that we receive a letter from the law department stating that this use of the funds is in keeping with the original purpose of the trust. Is there a motion on the table?
So move.
So moved by Commissioner Winkleman. Is there a second?
May I have a second, please?
Second.
Seconded.
That would be a roll
Seconded by Commissioner Costello.
call, on a roll call vote, please.
Mayor Laws,
Aye.
Vice Chairman Lombardi,
Aye.
Councilman Igliosi is absent. Ms. Silveria? Mr. Costello?
Aye.
Mr. Hirsch is absent. Mr. Winkleman?
Aye.
We have 5 ayes, 2 absent. The motion carries.
Okay, matter is approved.
Great. We'll move on to matter number 5 on the agenda, discussion relative to claims and litigation. Is there anything to cover today?
There's nothing to report or discuss today.
Okay, I'll entertain a motion to continue matter number 5 to our next Board of Investment Commissioners meeting. Is there a
So
motion?
move. So move.
So moved by Commissioner Winkleman. Is there a second?
Second.
Seconded by Commissioner Costello. Any discussion on the motion? All those in favor, please say aye.
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 Any opposed? All right, the motion carries. Nothing else on the agenda. I'll entertain a motion to, what's the term? The motion to end our meeting.
So move.
Second.
A motion to adjourn. Thank you. Moved by Commissioner Winkleman and seconded by Commissioner Costello. All those in favor, please say aye.
Aye.
Any opposed? All right, our meeting is adjourned. Thank you so much, everyone.